Hello and welcome to the Stock Planner channel. This video is about crazy people. No, not crazy people. People that act crazy when they get some news. Like the company is doing quite well and suddenly the stock price goes up. Or everybody's selling and I need to get out quickly and join the herd, and nothing's wrong with the stock. A couple days later it starts rising again and they sold at a low. It's all knee-jerk overreaction to news in the market. And usually a calmer person can make a lot of money. Man, this person is scary, really scary. Now this chart is a chart of Nike. It's today's, and this is my grand finale, but I'm going to do it right now. Look at this gap up. That's what we're really talking about, gaps, and the fact that they might just fill the gap. This is gapped up. It went from 132, 133 yesterday to 153. That's 20 bucks. Why? What changed in one day? And do you think it has more chance? This is all-time highs. Do you think it has more chance to go up in this economy? Even though the inflation scares, according to the news, is over. IBD put out a little report around noon today. Nike revised its outlook. It's very strong. And it blew away its earnings. It's surging. It might surge even Monday. This is late on Friday. It might surge on Monday. Is this an overreaction? Is this a scare? Well, it's not scared. They're not scared. They're just optimistic. This much optimism in a market like we got at the moment. I'm not seeing it. So this might be a good play to fill in the gap. Maybe down here, maybe down here, maybe it's going down here. But I don't believe after 2 or 3 days, it might go up a little bit. I believe it's coming down in here somewhere. But this is my grand finale. So let's take a look at gap plays and building a gap and discuss this subject. This is actually a very easy play, very easy to find. And I think you can make some money. What is a gap? It's a break or a hole in an object between two objects. Close, open, there's a hole, it's $20. That's a gap. The theory of gap fill is that after the optimism or the scare or the fear subsides, the stock market, the stock price will move back into its original location where before the gap and fill it. It's almost a guarantee that after a few days that it'll move in that direction, in the direction trying. And basically, a lot of people fade that kind of situation or fade the negativity. This is a zigzag indicator. I like it because it helps me see the trends, and that's all it's good for, really. It helps me plot the Fibonacci's as well. And you can see that here we had a downward trend, and then suddenly there's a gap. And the theory about gap fill is that eventually, at some point in time, you never know when it will fill that gap. So as soon as it occurs, do you place an order to buy? Because you know it's going to, according to the theory, you know it's going to go back up. And if you did that, you would have had all this time here as a loser, and eventually you would have to start winning here. So if you see a gap and you're using the MACD indicator or the stochastic indicator or the RSI indicator, waiting for it to come around the bend, waiting for it to come around the bend. This is the 20 and this is the 30. You would have waited to here to buy. And this one you would have caught that right here, bought here, and you would have had about 7 or 8 bars or days before you had and started winning. And then if you took it at 2%, you would have probably got out somewhere in here and missed all that there, but it depends on where you have your target set. If you just have it a percentage, you would have got out here. But if you believed in the gap fill, you would have waited to here and it would have filled it. Big winner on your hands then. Of course, we're going to look at a couple more. Okay, this is BABA. Nice strong trends. You have an upward trend here. You see the gap here? And this one is the gap, it gapped up. So is it going to fill? Eventually, if it gaps up, it's going to fade and go back down. Here's where it gapped up. So if you took the MACD and waited until about here, you would have won the stochastic RSI about the same time, and the RSI a little day earlier. These were all winners. So you see a gap, and you wait for a signal in the opposite direction, and you take it and take a chance. That's how I play it. Now, you can't use the zigzag because the zigzag is a perfect indicator. It waits, so you're not going to be able to see it. You have to see it with your other indicators. But a gap is easy to see, and it did fill it. That's 2. I think the next 4 or 5 are going to be all winner because I'm picking winners. But I guarantee I have a loser as well. The next stock I have for you is Plug Power. It's an EV stock. I've had difficulty trading this. This is beautiful, and so is this. But today we're talking about gappers. Here was a gap, and a few days later, it gapped again. The gaps are positive, so you're looking to go negative. Here's an indicator, the MACD. This is the MACD. This is stochastics. Coming back around the bend, back past the 80, right about here. And the RSI, coming around the bend, back against the 30, right about there. So they're entering in right there for a short to go down. Here's the gaps. Here's the first one. Did it fill that one? Yes, so if you entered here, you would have won this. It filled this one. Yes, it eventually filled that. That's a big winner. You must wait for your signal in the opposite direction of the gap. And don't take it too early because this was a double gap. If you had taken it early without waiting for this single, you would have entered in here and you would have had a loser on your hand. You probably stopped yourself out. It just would not have been a good. And this is why I don't like to play cheapy stock, because sometimes you'll have a very big move to the upside. Here's a gap right about there. Did it fill it? Eventually. Oh my God, look at this. That would have really, yeah, could have you waited. There's your signals about here. It would have been a winner. But I don't like stocks that do this kind of erratic stuff. I like more stable stocks. Looking at Twitter, you see a gap there? Waiting for your signal. There's one. You would have missed that one. Here's one. And you could have caught that with the MACD. But the other ones you wouldn't have. If you're using the other, you wouldn't have not got that. Here's a gap. And here's a gap. Waiting for your signal. Here's one. Here's one. And here's one. Entering in there. Did it fill? Yes. So this would have been a winner. This is iffy. That's earnings caused this gap. Go in the opposite direction. There's one. Here's one. And here's one. So if you entered in around here, did it fill the gap? This is a winner. A winner on that one. Back to Nokia again. Missed this gap here. Waited for a single in the opposite direction. Here's one. This would have been too early, but here's one. Depending on what indicators you're using, you wait to it. And here's it goes. Waiting for it to come down. It did not fill the gap here. And it didn't fill it anywhere else. This is a big loser. So it did not fill the gap here. So it doesn't do it all the time. Now let's get back to Nike. Here's a gap. Here's a gap. There's a gap. And here's a gap. This is down. And you want to see if it fills the gap there. Waited for a single. Here's one here. And here's one. So you would have got in somewhere here or here. This wouldn't have been, if you waited for this one, this would have not been enough time. But if you took these two early, this would have been a winner. Waiting for a single. Let's see what we got here. Right, here's one. Here's one. Here's one. And here's one. Waiting for a single. So let's just say it was here somewhere. And that would have been a winner. It eventually filled the gap right here. Here's a little gap. Took it in somewhere else there. And did it ever fill it? Yes, it filled it right about there. So that's been a little winner. And there's this big gap. Now the question is, no, not the question of do you feel lucky? Well, that is the question. Do you feel lucky today? Did I fire 5 shots or 6? If you're feeling lucky, I think this could go up a little bit, a couple days. You'll get your single to go short somewhere here for MACD. And this will come around somewhere here. And so is the RSI. The stochastics RSI will come around. And when you get those singles, go short. Now, do I think it will fill the gap all the way down here? I don't know. But I do think you can get a couple dollars out of it here in the next week, 2 weeks, 3 weeks. So how I'm playing it is I'm going to wait a few days until I receive a signal in the opposite direction from one of these indicators or all of them. And then hope that the gap will fill at some level, maybe all the way down. gap plays. Very easy to do. You don't get as many singles as you do for some of the other indicators, but they're very reliable. Let me show you. This is the back test reports, and these are the trades since the first of the year, or the end of the year. And they got a pretty reliable win rate, and the profit is $500. About 18 trades in about 6 or 7 months. Not a whole lot of trades. And I win 15 and lost 3. Max loss was taken there. I showed you that's Nokia, the loser, and I showed you the winner for Nokia. We went over Plug, Baba, and 8, and Twitter. And here's Nike as a play for this week. This cumulative profit is because I run the back tester report for longer amounts of time. Okay, I've got a secret to tell you. Don't tell anybody, but if you do your own due diligence and don't follow advice from anybody on the internet, but learn from them, don't listen to your dog, do your own work, you could win at this. The dog does say, though, to like and subscribe, and I would appreciate it myself because it helps my channel, gets more eyes on it. So I hope you'll consider putting gappers on in your toolbox, and I hope you look at Nike because I think it was a knee-jerk reaction, and you can make some money by just playing it cool like this guy. Happy trading. Catch you on the flip.